Oh man. Guys, in this video, there's not going to be a thumbnail. There's not going to be, a click. There's not going to be clickbait. There's not going to be anything. I need to talk to you, and I need to, bring people back into reality here, guys, because after what we saw on Friday, you would think that reality was setting in and euphoria was taking a little bit more of a back seat, but that's not what I'm seeing, guys. It's not what I'm seeing, and yeah, I'm just a little disappointed. Um, and yeah, I just want to make this video and just talk to you guys about the realistic probabilities, the realistic possibilities of what can happen. You need to understand, and it's so dumb. Like, I'm saying all of this after being a massive bull, and I'm still a massive bull, and I always will be a bull of the market going up and up and up over time. But we need to understand that the market goes in two different directions. It goes in both ways. And pullbacks, corrections, bear markets, recessions, although painful, are very important for continuing to have what we have here, which is a stock market that ebbs and flows because of not just valuations, but because of hype and because of everything else under the sun. And that's okay. Valuations definitely matter more whenever you get these pullbacks and everything, and people really start looking behind the scenes instead of just the hype. But it's important to have this market like this because it's a free and fair market, which I truly love. It's a free and fair market. Everybody's entitled to do whatever they want in this market. If you want to go all in 100x, 50x on, leverage, for crypto and everything, um, yeah, you could do that. You can win big and you can lose even bigger. And I feel terrible for the people that have taken their life because of this. It's absolutely terrible. Money, all of this stuff, it's not worth anything. Your family, well, really, God first, your family, your friends, your loved ones, and life, enjoying the time we have on this earth. That is what's most important. Don't get it mixed up. Money isn't real. Money is fairy dust, essentially, that we all choose to believe in. We all choose to believe in this fairy dust and use that fairy dust to make transactions. But make no mistake, it is a fairy tale. It is fairy dust. It is not real. And you definitely don't need to I hate getting into this. You don't need to live your life solely around it. I know that's easier said than done. I know we all have bills to pay. I know we all have struggles. I get it. This is mainly for the people that are making enough, that are fine. And maybe you're just putting your wants above your needs in life and so on and so forth. I don't know. I'm not going to get into all that. That's not what this video is about. This video is about what I'm seeing in the markets right now, what I'm seeing on X, what I'm seeing from a lot of people out there. And we were very, very euphoric. There were definitely signs. And let me caveat all this with I don't predict anything. I don't sit here and say recession's coming, this is coming. I don't know. Nobody knows. This market can go back up to all time highs next week and everything could be hunky dory and we go higher, higher, higher. Nobody knows. And I'll never sit here and say, oh, I know this, I know that, I predict this, I predict that. Or my algo suite predicts this, predicts that. No. Even though we used the algo suite and on Tuesday we unloaded 70% of our trades, right? I didn't do it because I was predicting and I knew exactly what was going to happen. I did it because the risk got even higher. The risk got even higher that there is a strong possibility that the probabilities and possibilities are now higher that we are very extended. And when we are very extended and there is a lot of euphoria, you need to be more careful. You need to be more careful when that happens. And that's exactly what we saw since April. Euphoria is now getting to a breaking point. People are throwing out outlandish price targets on companies that are unprofitable. No net income, no free cash flow, no nothing, just a story. And when that happens, coupled with everything else, you can get a massive move down very quickly. So when that happens, and then I start seeing my high five algo suite, my momentum indicators and everything start rolling over or start looking exhausted, start looking like the breath of the market is starting to thin out. And and then at that point, when we get that, and that's what I saw, I said, okay, let me take out 70%. It doesn't matter. It could be Trump, it could be tariffs, it could be a war, it can be anything. That's what you need to understand here, guys. It doesn't The markets ran a lot and they are now looking for any reason, small or big. They're going to choose any reason to sit there and say, "You know what? We're going to correct the market. 5%, 10%, 20%, 30%, 50%. We don't know." And I'm not sitting here predicting that's going to go this much down. But you need to understand, and the whole reason for this video is you need to understand that just because you think the market's going to rebound this week and on Friday you went all in with dip buying, no, 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 no. No. That is the wrong way to do it. That's not being risk adverse. That's not thinking logically. That's not being an investor. That's being a gambler. And I'm sorry if this is a harsh truth, but I need to say it. The whole reason for this video is because people are acting like this market it can't. People are acting like this market can't go down more than it did on Friday. And I'm here to burst your bubble. It can, and it can go down a lot more. You're just in a recency bias right now. You're in a recency bias of, oh man, up, 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 money, 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 gains, 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 and greed. Greed is setting in. And I understand. I've been there. I've been in your shoes. We all have been in your shoes. No matter what you do in this world, we've all been there. But I'm going to be your big brother and sit here and smack you upside the head and say, hey, no, you're not right this time. You're not right. Even if you are right and the market goes back to all time highs, you're still wrong in how you're playing this game. Because one of these times, like we saw in April, in the beginning of this year, one of these times, that dip of 3% that you went all in on, that's not going to be it. That's not going to be the end to the dip. You know that gif where it's like buy the dip and then there's a person behind them with the with a pew pew and they're like, "Oh, buy the dip, buy the dip, buy the dip, buy the dip," and then onward and out, and then there's a sniper up top and he's like, "Yeah, buy the dip." Yeah. That is real. That is so real. And you could sit there and you could say, "Oh, well, I bought the 3% dip. I went all in on it. If the market keeps going down, it's fine. I'll just hold until it comes back." You can say that until you see massive, massive red and massive, massive losses. Everybody can say that until you actually see the massive losses. When 3% becomes 30%, you're not pumping that tune out as much anymore. And I'm not attacking you. I'm not coming at you. I'm not anything. I'm truly here to be the big brother and like smack you upside the head and kind of be like, hey, it's time to wake up. Okay. And this is me saying, I don't know what this market's going to do. My high five algo suite is telling me and warning us that, hey, we could be in for more drawdown. for sure. The probabilities and possibilities of more drawdown are there. It's not 100%. Nothing's 100%. It's just simply saying, hey, risk is higher now than it was 2 weeks ago of the market taking a big pummeling to the downside. And I'm not sitting here saying you have to be a perma bear or anything. I'm just sitting here saying that you have to understand and you have to realize that it is a possibility and it's a stronger possibility. Okay. You have the catalyst there. You have a trade war fear with US and China. You have the government shut down for now 11 days. 11 days. Okay. And trust me, I'm a big person that I'm like, oh, government shut down, blah, blah, blah. But it is shut down and they're sunk in deep. Their feet sunk in deep right now. So I don't know. If it keeps going longer and longer and longer, then you're about to have the first paychecks not go out to federal employees. That's what you're about to have, guys. That's what you're about to have right. So, if federal employees aren't getting their money, which is millions of people, and then they can't pay their bills and they can't pay their mortgage because maybe they're living paycheck to paycheck, spending goes down. This will affect GDP. It's a ripple effect, guys. And I'm not trying to scare you here. I'm just trying to get reality back inside your mind. Trust me, we did 35%, 35% gains in our trading portfolio this past month. 35% gains in the trading portfolio. We took 250K up to $370,000 in a month in my trading portfolio. I get it. It was very nice. It was great. All our collective members were making money like crazy. All our trades were going very, very well because we are in a bull market. And as long as you're in the right positions and getting in them early and not chasing, you can make a lot of money. But we are now out of every single trade. Why? It's not because there's not opportunity to make more money to the upside. There for sure is more opportunity to make money to the upside. But what you need to understand is the risk of losing more money, losing your gains, losing money overall, or just getting wiped out, blowing up your account if another April happens. Not saying it will or won't. I'm just saying it's a possibility. Understand it's a possibility, friends. People are acting like it's not a possibility that this market can tank 30% tomorrow, and that is wrong. That is wrong way to think. If you ever did anything, out of the ordinary or, crazy, high risk activity, like I used to surf. When I go out to surf, obviously it's in my head that there is a risk and a possibility that a shark comes and bites my leg off. There is a risk and there is a possibility. I'm not going to go into the ocean and go for a surf and sit there and say, there is no possibility that I get bit by a shark today. No way at all. It's impossible. And then it happens. And then I'm sitting there like, oh my gosh, I can't believe I got bit by a shark in the ocean. It's his ocean. Come on. You know what I mean? And I get getting bit by a shark is slim to none. But you understand what I'm saying here. Stop thinking that X thing can't happen and start realizing that, yeah, there's a lot of opportunity to the upside. There's a lot of opportunity to the downside as well. Or maybe not opportunity, but there's a lot of room to the downside to get very, very hurt. And I'm not sitting here saying I sell it all. I'm still holding my long-term positions, my investing positions. I'm just out of all my trades because trading is dating, and I'm okay with going speed dating and then axing people that I just don't gel with. And then I'm good with investing when investing is a marriage. A marriage is going to be like me and my wife being married for over 10 years now. And we're not going anywhere. We got 2 kids together. Like, we're stuck like glue to each other. So through thick and thin, that's how it is, right? Investing is a marriage. I don't marry somebody. I don't marry a stock saying I'm going to get out in a couple months if I make 50% gain. No, no, no. I marry that stock and I say, okay, or that company. And I'm like, okay, I've done all my legwork up front. I really, really like this company. I like their fundamentals. I see their growth. I see their path, everything. The only way I exit that company fully is if my thesis changes. So basically, like, if my wife would just start completely treating me like dog crap, cheating on me, everything. You know what I mean? Then it's like, okay, there's no fixing this. Like this is done. Same thing with investing. Okay, so two different things. Trading is just speed dating, and you owe nobody anything. You can walk away from speed dating. You can walk away from it all as soon as you want. That's what I did with trading last week. 70% on Tuesday, and then, another 10, 20% over the rest of the week. And then Friday, I had like a couple positions left that we were way up on. And then one position we got back into that turned out to be a loser, RXRX. And I was like, okay, I'm fully out now. I'm fully out. Did I fear sell? Did I sell because of fear, uncertainty, and doubt? No, I sold because the probabilities that this continues into this week coming up are way higher now. Way, way higher. Okay? Every dip bounces back until it doesn't. And that's where we're at right now. It could bounce back. That's great. But if you're still sitting there and you're still 100% in the market and you have zero cash, what are you going to do? You have to think about the things that are out of your control. You have to think about the things that could happen because you don't control this game. I don't control this game. Nobody does. The collective controls the game. And most of all, the hedge funds. Okay. You just have to ask yourself, I'm fully in this market right now. What if, what if this market keeps going lower? What are you going to buy the dip with? If you're 100% in, what are you going to buy the dip with? Especially if you don't have capital being constantly injected into your portfolio to buy more. What are you going to buy the dip with? Nothing? Okay, so you're just going to sit there in your positions and watch them bleed? What if they're trades? What if you don't even believe in the companies? Then what? You're going to sit through those through a 10, 20, 30% or more correction? Really? You're going to sit in those and watch them bleed when you have no conviction at all, zero conviction of the company and where they're going. It was just a trade. What are you doing? What are you doing? Boom, smack you upside your head. Reality check. Reality check. You are lucky. I didn't want to make this all about fear, uncertainty, and doubt and blah, blah, blah. And it really wasn't. It's just about reality and giving you a reality check, not being a perma bear, not being anything. I don't know what's going to happen. I just know for trading, I'm out of my trades and I'm not going to get back into my trades until I get the coast is clear from my algo. Besides that, I'm just sitting and waiting. In my investment portfolios, am I buying some of the dip in some of these companies? Yeah, but not that much. We're only down only 3 to 4% after a 50 some percent plus run since April lows. So, yeah, once things start saying like, "Hey, I'm a really really good buy right now. You should buy me," and then I'm gonna be like, "Okay, yeah, I'll buy you." I'm still not just gonna unload all my cash. It's a gradual thing, like every 5% down, yeah, pretty much every 5% down. It's like, okay, I'll buy more, I'll buy more, I'll buy more, I'll buy more. And then once we get that bottoming out, and then we start going up, okay, I'll buy more, I'll buy more, I'll buy more, I'll buy more. And as long as a company is undervalued and you have a long-term head on your shoulders for investing, you're gonna be just fine. All I'm saying is don't blow all your funds here in the first 3, 4% pullback. It can pull back a lot more. Okay. It can pull back a lot more. And there's a lot of people out there acting like it can't. And that is the problem. And that is why I made this video. It's reality check time. It can pull back a lot more. And it will, and it won't even care about you because that's this game. I know there's a lot of new people out there. I know there's a lot of people that came in and they started making money very, very quickly and easily. That's not this market. And that's not how it always works. You need to make as much money as you can and make good money while the carousel is spinning. When the carousel stops, you need to make sure that you're positioned and you're ready and you've taken your gains and you've realized your gains before the carousel stops or when the carousel stops in the beginning, because after that, you don't know what's going to happen. You don't want to give back all of your gains. You don't want to lose after being up and winning. Especially we got tax season coming up. A lot of you, including myself, we've taken a lot. I've realized a lot of gains. I'm up a lot of money, which means I got to pay a lot of taxes. A lot of taxes I got to pay, guys. And if I sit here and get blown up now and I barely got any money to pay those taxes, that's a whole nother problem. That's a whole nother problem. And that is not a good problem to have, guys. So, yeah, I just want to make this video, guys. I don't know what's going to happen, but the risks are higher now. They are higher that we will get a bigger pullback than just 3%. I'm thinking 5% or more, right? Based on what I'm seeing and based on history and based on how my high five algo works and all that stuff. But I'm not sitting here saying that the market can't go back up immediately next week and we can't get like the government back open, all this stuff. Okay. I'm not saying that. Stop shift stop stop shifting what you're hearing to what you want to hear. Like hear what I'm saying. I'm saying I don't know. Nobody knows. I'm simply saying that you need to understand that what you believe can't happen can happen. And if it does, how is it going to affect you? The number one tool that I've been able to not conquer, but get way better at, okay, because I'm still human, I'm not perfect. The one tool I've been able to get a lot better at in my trading and investing journey is risk management. If you don't have risk management, you will not last past the bull market in this game. I can promise you that. Risk management is more important than you making 2 or 300 or 1,000% on a stock. Because if you don't have risk management and you keep doing the same bad habits over and over and over again in this market will humble you. And it's not going to be pretty. It's not going to feel good. I've been there. I've been there. I've been humbled by this market many times. You've probably been humbled by this market many times. Don't get humbled again. Learn from your mistakes, learn from the past, and sit there and say, hey, you know what? Ronnie's right. Let me just look at my portfolios, especially if I'm trading, and let me just get a little bit more risk adverse. Let me make sure that I'm prepared if the market does keep going down. You don't have to sell out everything. Okay? If you want to stay in your trades, okay, you're up a lot on the trades and your thesis still looks good for your trade. Okay. Don't sell out of all of it, but have a point where it's like, okay, I'm not just going to give all my gains back. I'm not just going to lose on this thing. Like have a point where it's like, okay, I set my stop loss. If it goes here, I'm done. And don't be looking to get into new trades right now to the long side. I'm not looking to get in any trades right now. And again, you could say, oh, well, you're going to miss out on a huge opportunity if we do go up next week. Cool. Let me miss out on the opportunity. I just made 35% in a month when we were at all-time highs. And while I was doing it, I had zero fears about this market going down. Well, not zero fears, but basically it was, the market's like there was no warning signs yet. It was like, yeah, I mean the market's extended, but there was no warning signs yet of like, hey, like it looks like we're, kind of teetering down, kind of rolling over a little bit here on some of our indicators. There was none of that. It was just, yep, up and up and up and up and up and up and up, money, 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 gains, 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 gains. And then this week, beginning of the week and end of last week, it was okay. Things things don't look so great. What's going on here? And it's funny because we called it on Tuesday, and then we saw a massive 1% spike in pretty much everything. And then Thursday was like similar. And then Friday was just like boop. And then one day on Friday, it The whole all gains in October became Eventober, and we lost all of the gains that were made in October in the indexes. So again, guys, I'm not being a perma bear. I love the market going up. I love it. It's great. We make lots of money. As an investor, I want this thing to tank. As an investor, I want it to tank because I want to deploy my 30% cash positions in my portfolios. I want to deploy that cash into great companies that at way cheaper prices. That's what I want. Right now, I have no risks with my trades, and I'm sitting here with a lot of cash in my investment portfolios, and I want in some of these great companies. So, guys, again, I just want to be your big brother here. There's no captions, or yeah, there's no, not captions. There's no thumbnail. I'm not doing a thumbnail. I'm not doing clickbait. I'm not doing description. I'm just literally raw, unedited. I'm giving you this, what I think is is good advice, and a good just mentality to have right now with where we're at, and you can do with it what you will. You can listen, you can glass half full, you can take it with a grain of salt, whatever. Um, whatever. But just really, guys, it can get worse. And it might. And you need to be prepared for that. That's all I'm saying. Appreciate you guys. I love you guys. Stay safe out there. Protect your gains. Get ready for hopefully some more buying opportunities. So appreciate you guys. Have a great and amazing Sunday.